Cutting losses is the key to winning. Say it isn't so. How can playing defense ever win a game? You may be asking yourself this question, but the stock market is not football. Our goal is to always make profitable trades, but profits are rarely the problem. Profits never kill us. Cutting losses is the key. Of course, our goal is to make profitable trades, but uncontrolled losses will destroy your confidence and it will destroy your virtual trading account time and time again. Now, we've always trained you to, the minute you enter into a trade, you of course go ahead and set a good till canceled sell order for your profits, whether you're selling half at 2% up, the other half at 3%, all of it at 3%, whatever it may be. And I'm just throwing those percentages out there. Maybe you're trading options and you're looking for a 20% gain. Whatever it might be, you need to know what it is you're looking for before you enter, and you put that good till canceled sell order in immediately. Why is that? Well, something crazy happens and the market soars and you happen to be at lunch. You want that already set and triggered so that it sells you out. You get your profit. You're done. Now, the complicated thing is losses. Well, just like deciding what your profits are, what your goal is for profits, you also have to go ahead and decide your loss limit before you trade. Decide your loss limit before you trade. Extremely important to do so. Everybody loves to remember positive events in life, but we bury in our subconscious minds our bad events. And investing, this results in trading paralysis. In other words, you get into a trade and at some point something goes wrong and the market goes against you. Our rule is to never ever enter a trade without setting that loss limit, and when it's triggered, you get out. However, human nature being what it is, and I know it because I've experienced this, even the best of us can talk ourselves into staying into a loser, hoping against hope, convincing yourself that things will get better as they get worse and worse. This is called confirmation bias. You see what you want to see. The result is killer losses. Now, as you practice trade, you've got to watch the emotions you go through and note them down on your trade worksheet. Hope, desire, futility, resignation, determination, and avoidance. As a trader, to be successful, you've got to understand that charting is never perfect. You can't expect to win all the time, and no system's perfect. Why is no system perfect? That's because we live in a dynamic marketplace where the memories of investors, constant feedback loops, the things we talk about when we talk about complexity science, they work to create a complex system that's always changing. But the trick is, by checking losses and writing profits, you're going to see your trades work over and over and over again, and your virtual trading account is going to soar in profitability. Let me give you a great trick, a great thing to do. I call these level lines. You have a profit level line and you have a loss level line. When you enter into a trade, you go ahead and set the profit and loss level lines before trading. You know, we had a crossover on the chart, and that crossover occurred at the second, it appears, the second up candle, and that would have been your entry point right after that. But we had gone ahead and found what our low-level line was, and there's any number of reasons for having a loss level line. It could be a simple percentage of how much you're trading. It might be 1% loss and you're out. It might also be calculated on where you've seen a floor before. And if things start going down there, you want to be careful that you don't let it ride any further. But typically, you're going to base that on a loss amount. You may also base it on some other factors, but remember, it's the dollar amount that you got to be concerned about the most. Then you're also going to set a profit line. That is where you look to sell. And the nice thing about profit lines and loss lines is they help you see where your floor was, where your ceiling was, and how close or far away you are from those. And when you reach them, of course, you can stay in, you can tool off a little bit more, particularly the profit line. You might sell a percentage and let more ride once you hit that. But when you hit that loss level line, there's almost no good reason ever to stay in. Maybe you've got a really compelling reason. Let me make this suggestion. Sell a chunk of what it is you have and take that loss, perhaps 50%, 75%. If you're just sure things are going to turn around, just don't keep 100% in there. Take a 1% loss on 75% of the trade and then see where the rest of it goes. But you've got to act. You can't just stand around and hope that things are going to get better, because I can tell you they're typically not going to get better. They're just going to get worse. Here at chartingwealth.com, every single day we have training for you. The market is open. Our daily market reviews, our once-a-week comprehensive review and forecast. Don't forget to purchase our book, Charting Your Way to Wealth. We have a copy, an autographed copy waiting for you. Follow the link in the show notes. And of course, if you want to be a Patreon supporter, follow the link there. All sorts of great training. And of course, our once-a-month call-in question and answer in-depth training that we have for all of our Patreon members at any of the 3 levels of support. We love to hear from you. CW@chartingwealth.com. Be sure to go to the website, sign up for our daily email. It's absolutely free. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.